Imagine waking up to a morning when every bank branch, every ATM, and every mobile banking app suddenly stops working. No warning, no explanation, just silence. People rush to their phones hoping it's a technical glitch, but the reality sinks in quickly. The financial system has frozen. This moment exposes how deeply daily life depends on digital money. Without access to deposits, individuals face immediate questions. How do we buy essentials? How do companies pay workers? The shutdown becomes a mirror, reflecting how fragile modern finance truly is. When banks close, cash instantly becomes the most valuable tool. People rush to find physical money, but there's a problem. Most cash doesn't exist in printed form. Only a small fraction of total money is physical. The rest lives on screens. Stores begin limiting purchases, and many refuse large bills due to uncertainty. As the lines grow longer, fear begins to overtake logic. The shutdown reveals how society traded convenience for vulnerability by abandoning cash over the years. Most people rely entirely on digital banking, automatic payments, online shopping, and card transactions. When the system collapses, these conveniences transform into a trap. Rent cannot be paid, salaries cannot be received, and savings cannot be accessed. Families who trusted technology suddenly realize they never had control, only access granted by institutions. The shutdown forces everyone to question where their money truly exists. For businesses, a banking shutdown is catastrophic. Payroll systems fail, suppliers refuse deliveries without immediate cash, and production stops. Even companies with large bank balances find themselves powerless because their money is locked away. Investors panic, markets freeze, and uncertainty spreads faster than information. The shutdown becomes a stress test, exposing which industries can survive without the banking system and which collapse instantly. Within hours, governments attempt to calm the public. They promise temporary solutions, but even officials know that trust, not money, is the real currency of stability. Emergency meetings begin, central banks discuss liquidity injections, and security forces prepare for civil unrest. The shutdown tests political strength more than financial capacity. If confidence breaks, no amount of printed money can repair the damage. As the banking system stays offline, an alternative market rises. People begin trading essentials, fuel, food, medicine, in exchange for services or goods. Cryptocurrencies and foreign currencies suddenly gain demand, while digital P2P groups form to survive outside the traditional system. The shutdown proves that when official channels fail, underground networks fill the gap instantly. As days pass, frustration turns into anger. Long queues appear at closed bank branches, protests emerge, and misinformation spreads through social media. Society becomes divided between those who prepared and those who relied on the system blindly. The shutdown reveals not only economic weakness, but also social fault lines that normally remain hidden. When banks close, people learn quickly that money is not paper or digits. It is trust. Without it, currencies lose value and transactions become meaningless. This moment forces individuals and businesses to confront a hard truth. Wealth is not stored in banks, but created through productivity, relationships, and real assets. The shutdown becomes an unexpected teacher, reminding society what money actually represents. Eventually, authorities restore parts of the system. Limits are imposed, withdrawals are controlled, and digital services return slowly. But nothing feels the same. People no longer trust the system fully, and banks struggle to rebuild credibility. Economists describe the shutdown as a global wake-up call, a reminder that the world runs on technology that can fail at any moment. The experience changes everything. Families diversify savings, companies strengthen cash reserves, and governments rethink digital infrastructure. The shutdown marks the beginning of a new financial mindset, resilience over convenience. It teaches one lasting lesson. Security isn't about having money, but about being prepared when the system you rely on suddenly disappears.